Hello friends, welcome to the Blockthrasher Early Morning Update, your number one source for cryptocurrency news, commentary, and analysis. It is February 16th, 2021, and it is freezing cold where I am at here in the Houston, Texas area today. It's crazy because they're not used to this type of weather here, but we had 4, 5, 6 inches of snow. Pipes are freezing. People are without electricity. You can't go to the grocery store because everything is completely shut down. And so I've been spending a lot of time just dealing with these issues. We've got one source of water left on the property. And thankfully, we still have electricity and actually have not lost electricity here at our place, but so many people in the area around us have. And it's getting rough out there. It really is. But thankfully, also, we're supposed to have temperatures return back to about 60 degrees here next week. And so everything should be just fine. Well, listen, I just want to say thank you for taking a little bit of your time and a few moments with me every single day to follow these daily morning crypto updates. I appreciate you all. Please be sure to subscribe, hit the like button, hit the notification button. If you haven't, go to blockthrasher.com and sign up for a membership. We've got a ton of great content that's being released there consistently. We've got a very vibrant Facebook group which you can check out, which is Facebook groups. It's facebook.com/groups/blockthrasher. Love to see you follow on Twitter as well. Well, let's get into it. Today we're going to look at a market overview. We're going to see what's happening. The market is volatile right now. Just last night we were seeing prices pump 10%. Kind of across the board. Today we're seeing a lot of red as things have just curtailed down in the later hours of the day. We're going to look at the market overview. We're going to talk about how there's some good news because BTC futures are signaling an expected pump coming down the road. We're going to talk about Peter Schiff. Peter Schiff is fumbling. Peter Schiff is always entertaining. We'll get into that. I'll save it for later. I was going to jump in a bit now just because it's kind of like, but I'll just wait. So there's some Fed FUD out there. Something we would expect, right? Also, institutional adoption continues to take place. More good news concerning institutional adoption. Will there be a Bitcoin ETF? Is it a possibility? Got some news about that. Hoskinson, Charles Hoskinson, founder of IHOK, CEO of IHOK, and founder and creator of Cardano, is making some statements about Ethereum. We're going to take a look at that. Also, we're going to take a look at a Cardano mini dive, right? Rather than a deep dive, we've written a mini dive that's been released on blockthrasher.com, and we're just going to look at that real quickly to give you guys a little bit of an overview. If you're not familiar with Cardano, you can get familiar with Cardano and know what it is all about. All right, moving over to the market. The market capitalization, total market cap is $1.44 trillion. That's down 2.18%. Now, we did see the market cap go past $1.5 trillion recently, which was phenomenal, but it is down just a little bit to 1.44 trillion. Volume 237 billion in the last 24 hours. Moving over to coinmarketcap.com to look at prices. Bitcoin is actually holding kind of steady in the last 24 hours. I mean, slightly down, but it is at $48,376. Now, if you aren't aware, we did see Bitcoin hit an all-time high. I think last night, early in the morning hours, Bitcoin went over $50,000 for the first time ever on some exchanges. Booyah, this is good. This is great to see, great to watch. Now, Ethereum is down a little bit. There's a lot of red in the market this morning, as I mentioned earlier. Ethereum down 3.94% in the last 24 hours to $1,745. Polkadot actually is the standout at the moment. It has jumped past Cardano in CoinMarketCap rank to number 4, pushing Cardano down to number 5, or if we remove Tether, number 3 and 4, but I digress. Polkadot is just playing with $30 right now, up 2.85%. It is up close to 30% in the last 7 days, doing very, very well. Cardano is slightly down 1.04% in the last 24 hours, still doing well on the week, up 25%. Plus 25%. It is currently $86. XRP is getting hit a little bit hard in the last 24 hours, and that might be, if you watched yesterday's episode, that might be a result of the fact that Jed McCaleb, one of the original founders of XRP, has been dumping massive amounts, hundreds of millions of dollars of XRP over the last week, and looks to continue to do the same, and obviously has done that over past months. Binance Coin is down 3%, coming in at $128.43. Litecoin is at $204.56, down 5%. Bitcoin Cash is coming in at number 9 today, down 9.42% at $682.50. And Chainlink is $31.59 currently. That's down 7.57%. Now, as you can see, if you're watching on the video, we have, for the most part, green, significant green across the board in terms of prices over the last 7 days. This has been a good week. It still looks like we're in a pretty strong bull market. The only thing that's not coming in green, interestingly enough, is Ethereum. Ethereum is actually down just 0.25% for the week. So Ethereum has been holding steady while the rest of the alts in the top 10 have been up anywhere from 10 to 30 plus percent. Good week for altcoins overall. Okay, moving on. Let's look at the stories of the day. Moving on to a news item. December Bitcoin BTC futures are trading at 10K above the spot price. Now, this is a good thing. So that means that Bitcoin futures are trading currently at close to $60,000. Now, this just if you don't know what a future is, I'll just explain it really quickly and simply. When you purchase a future, it gives you the option to buy that particular asset at a future date for a certain price. So what this means is that people are buying the option to purchase Bitcoin in December of 2021, almost 9 months from now, 10 months from now, at $60,000. So that means that these investors, which often are primarily institutional investors, are expecting that Bitcoin will be up above $60,000 by the end of this year. FTX and CoinFlex are currently the only two that offer futures contracts as far as December 2021. Now, obviously, Bitcoin futures are now available, as are Ethereum futures. Bitcoin has been for quite some time on the Chicago Mercantile Exchange, and a few others such as Bakkt and others. However, the only two that have the futures that far out currently is this FTX and CoinFlex. So as of writing, CoinFlex was offering the higher figure between the two exchanges at $60,250. That's for December 2021 BTC futures. On FTX, they were trading at $58,750. So this is just good news, just market sentiment news. This would indicate that there is an expectation by these investors that Bitcoin will rise another 10K at least within this year. Actually, the expectation, it would indicate that the expectation is that Bitcoin is going to be doing better than that because they want to be able to purchase Bitcoin or at least sell those futures for a profit at that time. Now, futures are sort of interesting because with futures, these are actually derivatives of Bitcoin, and so they're settled in cash typically on most exchanges. Therefore, it's not actually buying and selling a Bitcoin, but they're making a bet based on the idea that Bitcoin will rise above that price in the future in December, above $60,000. Moving forward, Peter Schiff. Now, if you don't know who Peter Schiff is, I really like Peter Schiff. I've been following Peter Schiff for many, many, many years. I mean, well before I even became aware of cryptocurrency, I was reading Peter Schiff and people like him, the things that they would write about gold and about silver, and they did much to educate many about how the Federal Reserve worked and how our currency system works and how we've got these inflationary issues and all these other sorts of things. And often Peter Schiff is sort of notorious for calling boom cycles or bubbles, and he declared that we had the really housing he's most notable for accurately predicting the real estate market bubble of 2008, 2009 in that time frame. He said that it was just overheated and there was a bubble, and he ended up being right. Now, sometimes he gets things wrong. And one area in which I think he gets things wrong is with Bitcoin. He's been a perpetual bear against Bitcoin, doesn't like it. Obviously, his business is gold, is selling gold, is promoting gold. And so, that sort of makes sense. But interestingly enough, as we've seen over time, one by one, these gold bugs start to capitulate and start to recognize, just I think because they have to, because of what happens with Bitcoin and in terms of its pricing and its march towards mass adoption, they start to reel that back just a little bit. Now, here is what happened with Schiff recently. He says, I got that one wrong. Peter Schiff says about Bitcoin and gold. Here's what he means. Peter Schiff has called Bitcoin a financial asset and admitted he has been wrong about gold and BTC both in the same day. As Bitcoin has surpassed the $50,000 mark earlier today twice, vocal Bitcoin hater Peter Schiff has stated that Bitcoin is a financial asset and admitted he had been wrong about gold and BTC. And here's how he was wrong. The CEO of Euro Pacific Capital, Peter Schiff, had predicted that Bitcoin would never surpass $50,000. And that gold would exceed $5,000. Now that Bitcoin has surpassed $50,000 and topped $50,700, making an all-time new high, Schiff believes at this level BTC is the king of all other bubbles, right? So he's out here stating that Bitcoin is the biggest bubble. Now, let's see what he says here. He says, statement, a financial asset is in a bubble when its price has no relationship to its underlying present value or a reasonable expectation of its future value, and investor conviction in price appreciation is high and fear of loss is low. At 50K, Bitcoin is the biggest bubble of them all. Yeah, no, I think a bubble is when prices rise to such a point that it no longer meets demand, and the demand and the desire for the asset just disappears. Now, could Bitcoin be in a bubble? I suppose that's a possibility, but Bitcoin has not reached a market adoption at any kind of level where it has to necessarily stop. I mean, the space is growing so quickly and there's so few people actually in it. You know, when you look at the housing market, for instance, in the bubble that occurred there, a lot of factors were going on with subprime mortgage lending and all kinds of other funny business that was happening within the banking world. But it's a well-established market. Now, you might have an increase of people wanting to purchase homes, sure. But that increase of people that would like to purchase homes or that can purchase homes is not that significant in our current time, because it's a market that's been well established for, a couple hundred years. I mean, it's not like it's something new that's growing in adoption like Bitcoin is. I mean, when you walk down the street and you talk to 10 people and maybe one or two can explain what Bitcoin even is, or has some, or maybe even less, that means there's 8 or 9 people that can still become interested, get on board, and purchase some Bitcoin. You throw on top of that all of the money that's out there that could come in from institutional investors and all the other stuff that's happening, and just to kind of make the claim that Bitcoin is in a bubble, well, I mean, sure, it could be. It has market cycles. It goes up, it comes down. I mean, here's the thing. This is one of the reasons why I try not to make price predictions, and I think that people who do are a little bit crazy, especially in the cryptocurrency market. In a well-established market, maybe in the stock market, even then it's difficult, but in some of these markets, you can do that a little bit more because they're so well established, and you've got all kinds of historical data to look at. You don't have that with cryptocurrency. You don't have that with Bitcoin. The space is so new. I mean, we've got 10 years maybe, but even then, it's just like it was nothing to where it is now, and where it is now could just be the tip of the iceberg to where it's going. And so to say it's a bubble is, in my view, just kind of a little bit ridiculous. And the interesting thing about this thing is you make these price predictions, as Peter Schiff did, and then it's just like, Bitcoin's never going to hit 50,000, right? Boom, next thing you know, happens, and it's kind of like, well, okay, all right, So it's funny. All kinds of signals out there that mass adoption is continuing to happen, and that Bitcoin is most likely just at the beginning of that trend that is pushing into adoption. And here is another instance of someone similar, a Bitcoin hater, to Peter Schiff, talking FUD, and that is the Fed president of, I believe it was the St. Louis, yes, James Bullard, president of the Federal Reserve Bank of St. Louis, seemingly doesn't understand why many are looking to cryptocurrency as a medium of exchange instead of a uniform currency like the US dollar. It's interesting. He calls the dollar this uniform currency, and Bitcoin's a non-uniform currency. And it's like, what does that mean? I think, what it probably means is that we can control, that they believe, the Federal Reserve believes that they can control the value of the US dollar. Maybe that's true, but that's kind of also the problem, right? In an interview with CNBC's Squawk Box on Tuesday, Bullard said the issue for making payments isn't currencies that can be traded electronically, but rather privately issued ones, as in the case for many cryptocurrencies. He referenced a time in the United States before the Civil War when there was confusion and a dislike for trading the, quote, equivalent of Bank of America dollars and JP Morgan dollars and Wells Fargo dollars. I think the same thing would occur with Bitcoin here, said Bullard. You don't want to go to a non-uniform currency where you're walking into Starbucks and maybe you'll pay with Ethereum, maybe you'll pay with Ripple, maybe you'll pay with Bitcoin, maybe you'll pay with $1. That isn't how we do this. Really? Why not? Everywhere else in the world, everything else you look at, competition is good. Would it be good for there to be one automaker, one car, one phone, one internet service provider, one telephone provider, one power company? No. Why? Because it allows for abuse. When one entity has control over something, everyone else then becomes victimized, essentially, and abused, because there's nothing that anyone can do. You don't have options. I completely disagree with what he's saying. Yeah, let's continue to just stick with a uniform currency that's controlled by one entity, so that I have no assurance. And that's the problem with the dollar. I have no assurance that the dollar that I'm holding in my hand today, do I have any cash? I think I have some cash in my pocket. No assurance that this cash that I'm holding in this $5 bill that I'm holding in my hand today will buy as much in 3 weeks or 3 months or even tomorrow that it buys today. In fact, you can be almost certain that I will get less gas for this, and I will be able to buy less food. Extend that out further, a year from now, 2 years from now, 10 years from now. If I just hold this $5, I'm losing money fast, right? Whereas with Bitcoin, and why is that? That's because I don't know how many dollars exist. Nobody knows how many dollars exist. I don't know how many dollars there will be 10 years from now. What I do know is there's going to be a whole heck of a lot more than there is now, especially with all the stimulus that's coming down the pike. And if history shows us anything, this loses value rapidly. And Bitcoin and the cryptocurrencies that are limited in supply are the exact opposite. They're deflationary assets. What I do know is that if the Bitcoin trend continues as it has, and adoption continues as it has, and there isn't any unforeseen catastrophic event, such as the government outlawing it in such a harsh way that you go to jail if you're caught with some and trying to exchange it for US dollars or whatever, that Bitcoin is going to buy me a whole lot more than, down the road than it does now. So this is interesting. Yeah, he just doesn't get it. It's not that they don't get it. It's that they don't like it. That's what it really boils down to. More evidence of mass adoption. It is not just Tesla, but big institutions keep piling into Bitcoin as the price rockets past $50,000. Here are some key facts and a list of institutional investors that are coming into the Bitcoin space. On Monday morning, business analytics I think I can say that word. I'm going to try again. Business analytics company MicroStrategy. Oh, wow. Sometimes these things just end up becoming tongue twisters. MicroStrategy announced a $600 million debt offering and says proceeds of the sale will be used to buy more Bitcoin. Oh, yeah. Buy more Bitcoin. Over the weekend, news broke that a $150 billion division of investing giant Morgan Stanley is considering adding Bitcoin to its portfolio. Yes, BNY Mellon announced on Thursday last week that its wealth management arm will now process cryptocurrencies through the same channels as other holdings like stocks and bonds. We've got more. The same day, the approval of the first North American Bitcoin exchange traded fund was announced in Canada. I covered that just a couple of days ago. That was the first ETF in North America happening in Canada. Let's see if it's going to happen here. I think we've got more about that coming up in just a moment. MasterCard is also joining in, announcing last week that it will begin to support some cryptocurrencies on its payment network. Booyah! Here we go. The Bitcoin train. It's starting to steam. It's starting to move. It's rolling down the track, and everybody's wanting to jump on board, and that's going to keep happening. Here's more evidence of that. NYDIG files for a US-based Bitcoin ETF with Morgan Stanley on board. Now, there have been people that have tried to launch ETFs in the US, Bitcoin ETFs, and till now it's always been shot down, but we've never had a Morgan Stanley on board. The crypto-focused financial services company has filed S-1 paperwork with the SEC, reigniting the debate over a Bitcoin ETF. New York Digital Investment Group, or NYDIG, has submitted paperwork with the United States Securities and Exchange Commission to launch a new Bitcoin exchange-traded fund. As an authorized participant, Morgan Stanley is expected to sell shares to the public at prices that reflect the fund's assets, supply and demand, and underlying market conditions. The shares will trade on the New York Stock Exchange, ARCA exchange, under a yet-to-be-determined ticker symbol. Good news. All right, let's wrap this thing up today. I've got one more thing for you, and that is all about, going to talk about Cardano for a little bit. Now, Charles Hoskinson, really in a YouTube video, it might have been one of his live AMAs, made the statement that Ethereum's first mover advantage means nothing. That is his position, and I think I have to agree with this here. People talk about first mover advantage, and it is a thing to be reckoned with. I mean, it is an advantage, absolutely, for sure. Coming to market, being the first, and Ethereum was revolutionary in many ways with smart contracts and decentralized apps and all these types of things. It's great. But when we are talking about the technology space, and I think this Hoskinson did go on to extrapolate on this a little bit, when we're talking about that space, things move so fast and so rapidly. And, you think back about MySpace, you think back about AOL, you think back about even like Betamax versus VHS and all these other, you can go on and on and on and on about how there were companies and products and that had first mover advantage, but they messed up in a number of different ways, or they didn't quite have something right, or and users just move, right? I mean, it only takes a click of the mouse. It just takes a few seconds. I mean, it's not a difficult thing. So when something comes along that just is far superior, it's not that difficult to move. And so, we could debate the differences, and we will be and are quite frequently, between Ethereum and Cardano and the rest of the competing projects, Polkadot and Avalanche and Phantom, and just on and on the list goes. We can debate all that stuff, but I think this point that first mover advantage, it's a thing, but it doesn't necessarily prevent something else from coming along and surpassing it relatively quickly, at least within this space. So according to Cardano founder Charles Hoskinson, Ethereum's first mover advantage will not be a threat to Cardano's dominance as a blockchain. In a recent video on YouTube, the IOHK CEO revealed that he isn't fazed by Ethereum's network effects, claiming that in 2020, only 31% of all new dApps deployed were on Ethereum. So, it's an interesting statistic that we are already starting to see as a result of the problems that Ethereum has been having with high transaction fees and other issues. I mean, it's an inflationary currency that has no cap. It could go to infinity. Other problems with smart contract type of we've been seeing because of the accounting model and some other technical things that I won't get into now, that there have been smart contract hacks, DeFi hacks. We saw one just the other day. You can go back and look at the video from 2 days ago, I believe it was. So these problems are just are part of the issue here that are causing developers to move to other projects, Cardano being one of them, one of the primary ones, because they need more speed, they need more security, they need more whatever it is, transactions per second, or all these types of things. So he continues on, it's not a comparison at all, quote. He went to say, adding that Ethereum's first mover advantage is capturing monopoly means nothing in the crypto industry. Not surprisingly, Hoskinson's comments were in direct opposition to those made by Ethereum proponent Anthony Sassano last week, with Sassano claiming that when blockchains position themselves as eth killers, they are only further reinforcing Ethereum's network effects. While record high gas fees persist on the Ethereum network and scalability remains the need of the hour, the network still remains one of the most popular among users in the space. So it's interesting because we've had this debate for a long time between the Bitcoin maximalist and Ethereum users that Ethereum was bringing something to the table that Bitcoin otherwise wasn't. And it's just kind of funny because now it's like we've got these Ethereum maximalists almost, and I suppose that will continue to happen as different projects create their fan base and people want to but it's going to be a lot of fun to watch in coming years to see what happens within this space. And this goes back to the whole conversation about the Federal Reserve chairman, St. Louis chairman, is that I think this competition is good. It's going to foster innovation. These projects are finding problems that came before, whether it be with Bitcoin or Ethereum or whatever it is, and they're fixing those. And each project has something revolutionary, has a great idea. And so this competition is just making the space better. It's opening up doors and opportunities and possibilities for cryptocurrency applications, for decentralized applications to do things that are going to be revolutionary, that are going to change the world, and it's exciting to watch. So now we're just going to jump into a real quick Cardano mini dive. This has been posted at blockthrasher.com, and if you haven't already gone there and signed up as a member, you can get a free membership, and almost all of the content is freely available there. What we are doing at Blockthrasher is we are working as hard as we possibly can to bring you the best possible news, commentary, analysis of the cryptocurrency space, and we're doing this with mini dives and deep dives into each project, where we're going to bring to you all of the pertinent information. We are researchers and analysts taking the time that you don't have to dig deep and to learn as much as we possibly can to understand, and then to bring that to you in the most simple and easy to digest and clear and understandable way. So this is a mini dive which we've just released on the website at blockthrasher.com, and in this mini dive, Curtis Caldwell, a recent new member of Blockthrasher and part of our community, breaks down the third generation blockchain protocol and compares its advancements to Ethereum. So what is Cardano? Cardano is a part of the third generation blockchain class. Now, it was created by IOHK, and they have developed it, and they began that in 2015 and launched it in 2017. So the chain initially launched in 2017, which is quite some time ago. 18, 19, 2000, 2021, 4 years ago. And it's interesting because one of the criticisms that has come about Cardano quite frequently is that they've been around a long time and they launched a long time ago, but they've got no actual product, because it's just now that they're starting to bring on board native assets and that they're starting to bring on smart contracts and all these technologies. But that was not because it was not because they're incompetent or don't know what they're doing. In fact, it's the opposite. It's because the philosophy of Charles Hoskinson, the founder, was that we want to have a scientific method in which every single part of what we're doing as a development team, creating this blockchain, every single part gets written into academic papers, and then it's peer reviewed by our peers in academics around the world, and we're going to move slow, and we're going to test thoroughly, and we're going to make sure that quality assurance is there. And so he has often stated, if we're going to build the global operating, financial operating system of the world, in which all these dApps and other things are going to be built upon, we want to make sure that we've gotten it right. Because it's really difficult, as is being seen with Ethereum, to go back or to make those changes moving forward if you don't have a good governance system or you don't have a model in place to do that. So that is one of the core propositions of Cardano. So Charles Hoskinson, co-founder of Ethereum and founder of IOHK and CEO of IOHK and founder of Cardano, believed that he could create a better blockchain. He's absolutely convinced of it. The idea was to fill the gaps Bitcoin and Ethereum created with scalability while staying decentralized, no concentration of power. Cardano's roadmap focused on a proof-of-stake mechanism to ensure it could handle more transactions per second than its predecessors. So now we get into the difference between proof-of-work versus proof-of-stake. Now, you've probably heard of mining, and Bitcoin is a proof-of-work. Ethereum launched as a proof-of-work chain. So what happens in a proof-of-work chain is that these miners use their computers. If you don't know what mining works or how it works, this is how it works. The miners receive hashes that are sent from the blockchain, and they have to solve those hashes, and they have to solve those blocks. And inside of that hash, along with that hash, is all the transaction data and information of all the transactions that are occurring on that network. So when people are buying and selling or sending and receiving, that data is sent to the miner, it gets processed. That miner is racing against all the other miners, right? And you have thousands of miners spread out across the globe. So they are racing to solve that block, to solve that hash, and then what they do is once they have that solved, they submit it back to the blockchain, where all the other miners have to verify that and have to say, yeah, that miner was the first to submit the block, and we validate that it's accurate and that it's true and it's legitimate, and then it gets inserted into the blockchain and becomes an immutable record within the blockchain. And so that's how it works. And so you can think of it, to simplify it, is the miners are the processing power, right? The blockchain is the database, and the miners are the processing power, and the miners process all the transactions just like your bank's software would and insert it into the database. And when they do that, there's a fee, and they get paid. The miners get paid a small fee for doing that, and that's how miners make money. And so this is how proof of work model works. And it's a very good model. It's been very successful. It's very secure once it becomes established, right? So Bitcoin, for instance, there's this issue with proof of work mining, which is called a 51% attack, which basically means that if somebody has the computing power to take over 51% of the network, they can solve all the blocks moving forward, and then they can insert code to go back and roll back the chain. And we've seen this happen, I think, just in the news yesterday. VSG, which is, I'm blanking on the name of the project right now, it was hacked and rolled back like 6 months or a year or something of blocks. And so it's nearly impossible that could happen with Bitcoin currently, just as an FYI. But we've also seen this happen with Ethereum Classic a number of times. And so with the bigger networks, it's pretty much impossible because they are decentralized and spread out enough. There's enough miners on the network that type of thing is highly unlikely to happen. But it's one of the problems that proof of stake systems we're looking to correct and have. So proof of stake models allow for both speed and security. The problem with the proof of work was it's difficult to create security with smaller projects, and it's slow. Bitcoin has a transactions per second speed of like 5 transactions per second, which is incredibly slow. So proof of stake models allow for both speed and security. To participate in a proof of stake model, rather than having a miner like you do with proof of work, all you have to do is have a certain amount of tokens that sometimes on some of the blockchains, like with Ethereum, it will be such that you have to lock those coins up for a given period of time in order to stake. With Cardano, that's not actually the case. And with others like Algorand, that's not the case. All you have to do is have them in your wallet, and then you become part of a staking pool, and you are able to participate in the processing of transactions. So there's nodes that run, and there's staking pools, and the staking pools kind of take the place of the miner and actually process all the transactions. But all the users, like everybody that holds that particular coin, in this case Cardano, is able to partake in that and to stake and also earn interest, which is really cool. It's about 6% currently. So all you have to do is hold the Cardano in your wallet, and you're getting more and more and more and more. Usually the number of coins needed to do this staking is a decent amount. Coin holders with large amounts of coins would obviously want the project to do well, and so they would have more of an incentive they would have a stake in the project and more of an incentive to continue to do that and to make sure that everything continues to work properly with the chain. And this also is connected to governance with Cardano and similar coins. Everybody that is staking is able to partake in the governance and is able to vote, right? So instead of having hard forks or having like what we saw happen with Ethereum, and then there was Ethereum Classic or Bitcoin and Bitcoin Cash and Bitcoin SV and Bitcoin Gold and all these others, changes are made through a governance system, and Cardano has one of the best governance systems. So this staking, what it does is it cuts down on the number of computers that are needed to agree and to create consensus, it's called, right? So proof of stake keeps the project decentralized but still increases the transaction speed. So for example, Ethereum is moving to a proof of stake model, but still relies heavily on proof of work and conducts about 25 transactions per second. Cardano is currently clocking about 250 transactions per second, but can scale up to millions as the network grows. So Ethereum has been trying to make this move to proof of stake, similar to that which Cardano operates on, and it's been a slow and it's been an arduous and difficult process. And currently, it's hybrid. You can stake, but you can also still mine with proof of work with Ethereum. Scalability. Now keep in mind that there are side chains attached to each project that allows for a faster transaction speed, but that's a whole different conversation. If you're interested in Cardano side chains, check out Hydra. Cardano's system technology, they've just named for sidechains is named Hydra, and so you can find out more information about that if you want and Google that. It has been a pretty good scalable solution. Cardano seems to be following Ethereum's model. Why not? It's been successful so far. So Ethereum is also trying to improve scalability through sharding, which is what they refer to sidechains as. They call it sharding, right? Ethereum's scalability has been under scrutiny as its model increases the cost of transactions as the network becomes congested. There are some excellent arguments as to why this is a good thing, but I won't focus on that here either. The crowd that views this as a negative aspect of Ethereum is migrating to the Cardano blockchain. So as Hoskinson was mentioning, like something like 34% of new dApps have been launched on Ethereum, and otherwise developers are choosing other platforms. Cardano is introducing smart contracts and custom tokens to the blockchain. I apologize that I keep going back to Ethereum. However, to understand Cardano and what's happening, you have to understand Ethereum. Yeah, Ethereum is sort of the genesis point. It's sort of the the original of all of this, and so yeah, if you're going to begin to develop on Cardano, or if you were going to do Polkadot or any of these others, it's a really great idea to begin with Ethereum. And I've seen the developers of both. I've seen both Charles Hoskinson and Gavin Wood of Polkadot. Both have stated this, that go start studying Ethereum, studying the Solidity language, and learning how to develop a dApp on that platform. And then when you want to scale up and start launch it on Cardano or whatever, Polkadot. It's a good path to get you there. So Ethereum's popularity has grown because of this feature. Although many blockchains are much faster than Ethereum, and yes, even Cardano, this feature makes the platforms super attractive to developers and startup organizations. They can develop an idea, create a token, raise funds, and build their project with the funds. It is a hotbed of innovation and the definition of truly free enterprise. Now, here are some of Cardano's advantages. Cardano has some clear advantages over Ethereum. IOHK developed the Marlowe programming language to allow financial professionals to create smart contracts without learning complex code. So there's this Marlowe playground, which is kind of a drag and drop interface where accountants and financial professionals can go and build a smart contract without having to understand any type of code at all. And it's very, very, very useful for onboarding of people that would be interested in creating a smart contract, but obviously aren't developers or programmers. Cardano also allows participants to stake a smaller amount of Cardano to receive staking rewards. So with Ethereum currently, if you want to stake, you have to have 32 Ethereum, which currently, as the time of this writing, was 52,000. So obviously $50,000 US dollars is out of the reach of many people, and so they're not going to be able to stake. Now, that being said, you can use a staking pool or a staking service. You can stake Ethereum on, even a lot of the currently popular exchanges are going to allow for that, right? But then that brings up the whole issue of custody and all those other types of things. So if you wanted to have full custody and stake with Ethereum, you got to have 32 Ethereum. With Cardano, it's not like that. You only have to have 5 Cardano to stake, and you're set and you're ready to go, and you do it right within the wallet, either Daedalus or Yoroi, or you can even do it in the Atomic wallet. Exodus, I believe. So almost all the wallets are integrating the staking feature as well. So the other advantage that Cardano has is that you can stake your Cardano address instead of the actual coins. And this is huge, and I think this might be bigger than we realize. And moving forward, it's going to be interesting to see if that's the case. But again, just to reiterate that statement right there, it's important. It's very important. You don't actually have to lock up your coins or send them into a smart contract with Cardano to stake them. You stake the address and not the coin. So you have a staking pool that you're partaking in, but all you're doing is attaching your address to that staking pool, and that staking pool does not have custody over your coins. This means that you can send, receive, pull out. You don't even have to pull them out of the staking pool. All that happens is, in practical usage, is you just go into the wallet and you send somebody some Cardano and it gets sent, and the amount that's staked is decreased. And as your rewards come in, they just automatically get added to the amount that's staking. And so this is a beautiful thing. Now, this might have some serious ramifications, because I believe that the same thing occurs when you will be interacting with smart contracts and dApps within Cardano. Now, one of the problems right now that's allowed for some nasty hacks to occur is that when you use an Ethereum smart contract and you put some of your Ethereum into a liquidity pool or an Ethereum based token into a liquidity pool, or do some yield farming or something like that, and even when you stake it, it will be this way potentially, that you have to actually like hand over custody of that token into, in fact, one of the things that illustrated this was Parity Technologies. Parity Technologies is the company that was founded by Gavin Wood, who is the founder of Polkadot. Now, they created a wallet called the Parity Wallet, and in the early days of Ethereum, they lost hundreds of millions of dollars of Ethereum because what ended up happening was there was an error in their smart contract code which ran the wallet, and the Ethereum that was put into the wallet of all of its users, some of it ended up getting locked and frozen into the wallet because of that error in the smart contract code, and it was gone forever. They've never been able to recover it. So with Cardano, if I understand things correctly, and it seems like this is the case, and this has to do with the UTXO transaction model rather than the accounting model, you're not actually locking your coins away or giving custody over to the smart contract. You retain that, you keep that within your own wallet, and this could be a huge advantage, as Cardano will enable you to unstake those tokens at any time. Conclusion: to wrap things up, I believe Cardano has a significant advantage right now. Ethereum is racing to migrate many users, processors, and projects to proof of stake. The size of this move is enormous and complex. Developers are flocking to Cardano in the short term as Ethereum-like features roll out. If Ethereum does not fix its scalability issue, the migration will most likely continue and gain speed as developers and users lose faith in the Ethereum project. The good news for Ethereum community is I don't think it matters in terms of Ethereum price as Ethereum shifts from utility to security as the network fluctuate. Cardano has a bright future in the short term. Expect a similar scenario to play out as fourth generation products like Hedera Hashgraph process 10,000 plus transactions per second, roll out smart contracts and native tokens. Still, there's a lot of room to grow as Ethereum struggles to gain its footing as the network remains congested. So basically what's happening here is we're seeing a platform more, and the fight is for two things, I would say primarily. Number one is network effect, and number two is developers. And they really go hand in hand. Can we as a project attract more developers? Can we provide better technology, better support, and even funding? Funding is a big issue, and Cardano has some incredible funding in place with the Catalyst system, and there's a governance system attached to that where they are going to be able to fund a lot of projects that want to get developed, and the same thing is occurring with Polkadot. And so it's going to be about attracting those developers. You know, it only takes a couple killer dApps to get created on a platform that can just launch that platform into the stratosphere. And then it's going to be building that network effect. It's just onboarding users, getting users in, getting users involved, and using the system and the network. So we're going to keep watching that. We're going to keep you guys informed, of course, as always. So I just went through that today because I wanted to give you a little bit of a taste of the type of content that is being posted at blockthrasher.com. And that was sort of a mini dive. And we are also working on deep dives. I've got a Polkadot deep dive coming soon where we're going to go a little bit deeper into the details of that cryptocurrency and that project. And so please keep coming back. Please subscribe. Please hit the like button. Visit blockthrasher.com. I hope you all have a wonderful day, that you stay safe, you stay warm if you're in a cold place as I am currently. And as always, remember, friends, it is a great day to keep stacking and keep earning more crypto. Thanks. Talk to you soon. Love y'all. Goodbye.